All right, everyone, welcome back to Crypto Brain. And before we dive into today's market breakdown, make sure you subscribe to the channel because here we know crypto markets using logic, data, and market structure rather than hype. And if you want to stay ahead of developing crypto narratives, this is exactly where you want to be. Now, today's discussion focuses on a token that has recently started attracting every different kind of attention inside the crypto market. And that token is Toshi, and while many traders usually talk about pumps and explosive upside movements, today's headline actually takes every different direction, because the current narrative forming around this asset is becoming increasingly complex, which is why the title of this analysis is simple but important: Toshi Dump. And understanding whether the market is preparing for a deeper correction or simply building a larger structure is exactly what we will analyze today. When we examine the recent behavior of the Toshi market, the first thing that becomes immediately visible is the change in momentum structure, because earlier phases of the trend were dominated by strong narrative-driven buying, but more recently the price behavior has started showing signs of hesitation, and inside financial market, hesitation usually signals one of two things. Either the market is preparing for continuation after consolidation, or it is preparing for a corrective phase where weaker positions begin exiting the market. One of the most important signals analysts monitor during moments like this is trading volume, because volume represents participation and participation reflects capital movement. And hen markets begin showing increasing selling pressure while prices struggles to maintain higher levels. It often suggests that early investors may be taking profits, while newer participants are still deciding whether their narrative remains strong enough to support further upside. However, the situation becomes even more interesting when we begin analyzing whale behavior, because large investors rarely react emotionally to short-term volatility. Instead, they operate strategically, and their actions often reveal far more about the true direction of a market than retail sentimental one. During the last several sessions, analysts tracking on-chain data have started noticing irregular accumulation and distribution patterns surrounding Toshi, which suggests that large holders may currently be repositioning themselves within the market, and when whales reposition their holdings, the market frequently experiences sharp volatility, because large transfers of liquidity can temporarily disrupt the balance between supply and demand. Some traders are interpreting the current structure as the earliest age of a dump thesis, where the market could potentially revisit lower liquidity zones before establishing its next major support level. And if this scenario develops, the purpose of such a move would not necessarily be to destroy the market, but rather to reset positioning by removing leveraged traders and creating a stronger liquidity base for the next cycle. Another layer of complexity comes from the broader geopolitical and market environment, because the crypto market does not operate in isolation. Global financial sentiment, global liquidity conduit, on-sand and international tensions can influence a risk appetite across all speculative assets, and recently discussions about potential war situations and global instability have started appearing across financial media, which naturally increases caution among investors. When global uncertainty increases, many traders reduce exposure to high volatility assets, and meme coins typically belong to the highest risk category inside the crypto ecosystem, which means tokens like Toshi Cane experiences sharper reactions during periods when market participants begin moving capital towards safer positions. But it is extremely important to understand that meme coin markets operate heavily through narrative cycles, and the narrative surrounding Toshi remains one of the most fascinating aspects of this asset, because many traders continue describing it as part of the broader meme ecosystem, of 10 drawing comparisons between Toshi and the famous meme token Shiba Inu, which historically demonstrated how powerful community-driven speculation can become when attention spreads rapidly across the internet. Narratives like these can sustain interest even during corrections, because the strength of meme assets often comes from community engagement rather than traditional financial metrics. And when communities remain active on social platforms, the narrative can re-accelerate extremely quickly once selling pressure begins stabilizing. From a structural perspective, the most important factor traders should monitor right now is whether the current weakness evolves into a full-scale dump or simply forms a controlled correction within a larger market structure, because there is a significant difference between panic selling and strategic consolidation, and identifying that difference is exactly what separates emotional traders from disciplined analysts. If the market begins forming lower highs accompanied by expanding selling volume, that would strengthen the bearish, suggesting that the market may indeed be searching for deeper support levels before any potential recovery occurs. But if price stabilizes while selling pressure gradually decreases, that could indicate that whales are quietly accumulating positions beneath the surface, preparing for a future narrative expansion. Markets often move in cycles of expansion and contraction, and experienced analysts understand that corrections are not always negative events. In many cases, they are necessary phases that remove speculative excess and allow markets to build stronger foundations for the next stage of growth. At the moment, the Toshi chart appears to be entering a critical decision zone where the balance between sellers and buyers will determine the next direction of the trend. Enduring moments like this, patience becomes the most valuable strategy because reacting emotionally to short-term volatility usually leads traders into poor decisions. The smartest approach right now is observation, monitoring whether liquidity continues leaving the market or whether new participants begin entering at lower price levels, because those signals will reveal whether the current structure is forming a deeper dump scenario or quietly preparing the next narrative cycle. And this is exactly why professional traders focus on data rather than hype, because narratives change quickly, but market structure always reveals the truth behind price movement. If you found this breakdown valuable, make sure you subscribe to Crypto Brain for more analytical crypto insights. Stay disciplined, stay analytical, and remember, in crypto, the biggest opportunities and the biggest risks often appear at the exact same moment.